What's the difference between a VA loan and a conventional loan? That's what we are talking about today, and we are starting right now. Thanks for joining. I'm Ashley Novak. I'm a local real estate agent here in Los Angeles County with Rodeo Realty. We post new videos here every Wednesday about real estate in the local area. If that's something of interest to you, make sure you hit the subscribe button and the notification button so you will never miss a video. Also, stay tuned until the end of the video to learn more about our wine of the week pick. First things first, when I say conventional loan, we are talking about a standard mortgage from a bank or mortgage company. It's a conforming loan, which means it conforms to all the underwriting criteria based on income, credit score, and debt-to-income ratio. The VA loan, however, is a benefit to veterans, service members of the military, and survivors, and has a 25% guarantee by the VA. What that means is that if a VA borrower were to default, then the VA would pay the lender up to 25% of the loan. Because of this guarantee, it affords service members different benefits that can't be found when using a conventional loan. Right now, I am going to tell you the 6 major differences between a conventional and VA loan. Number 1, VA loans require zero money down, whereas conventional loans typically require a minimum payment of 5% down. There are circumstances where you can put as little as 3% down on a conventional loan, but that's not common. Number 2, conventional borrowers with less than 20% down pay private mortgage insurance. VA loans do not have private mortgage insurance ever. PMI is determined based on the home price, your credit score, and other factors. And PMI can easily run a few $100s per month. The PMI rate ranges between 0.55% and 2.25% of the loan amount. As an example, if you purchased a home for $500,000 with 10% down at a 3% interest rate on a conventional loan, your PMI would run approximately $221 per month or $26.52 per year. Whereas a VA loan, you could put zero down and pay nothing in private mortgage insurance for the entire life of the loan. I go more in depth about PMI insurance in another video, so if you want to learn more, click the link in the box above. Number 3, VA loan rates are the best rates available on the market and are typically about 0.25% less than a conventional loan rate. Since VA loans are backed by the Department of Veterans Affairs, it gives lenders more confidence to extend better rates to borrowers. Number 4, VA loans typically have easier qualifying criteria compared to conventional loans. Because VA loans have such a low foreclosure rate at 1.5%, there is not a minimum credit score, and the debt-to-income ratio is higher on a VA loan than a conventional loan. On a conventional loan, 620 is typically the minimum score required, and the max debt-to-income ratio is typically 45%. If you aren't quite sure what a debt-to-income ratio is and want to learn more, I have another video explaining it in detail that you can click above. I'll also leave links to any pertinent videos in the description below. The number 5 difference between VA and conventional loans, and a rather large difference, is that VA loans are only for primary residences. This doesn't rule out duplexes or fourplexes, but to use a VA loan, you must intend to live in the property you purchase. Conventional loans can be used to purchase a primary residence, a vacation home, rental properties, and investment properties, but VA loans require you to be an owner-occupier. So if you are trying to buy an investment property, VA loans are out. The number 6 and last difference between VA loans and conventional loans is that VA loans come with what's known as the VA funding fee. The VA funding fee ranges from 2.3% to 3.6% of the loan, but can be rolled into the entire loan amount. However, not everyone has to pay the VA funding fee. If you have at least a 10% disability rating, you are exempt from the VA funding fee. If you want to know more about the VA funding fee, click the link in the box above. So those are the 6 major differences between a VA and conventional loan. There's a lot of false information out there about VA loans. I know because I was told misinformation about the VA loan and ended up getting a conventional loan that cost me thousands and thousands of dollars I didn't need to spend. So that's why I want to educate other veterans. Also, I know some amazing VA lenders that I can connect you with, as not all VA lenders are created equally, and you want someone who can navigate the process seamlessly for you. If you would like to know more information about the VA loan or home buying and selling process, feel free to reach out to me or comment below with any questions you may have. All of our info is in the description below, and I would be honored to help you with your next real estate transaction. So we are going to close out with our Wine Wednesday Wine of the Week, and this week's wine is a Cabernet Sauvignon from Horse Heaven Hills in the Columbia Valley in Washington State. I included a link to the wine in the description below. And fun fact, my first duty station was McChord Air Force Base, now known as Joint Base Lewis McChord in Lakewood, Washington. So let's cheers to veterans and the Evergreen State. Thanks so much for tuning in, and I look forward to seeing you back here next Wednesday.